Hey everyone, and welcome to Earnings Cheat Sheet for Friday, May 23rd. It's Alexis, Garcia, and Ed Carson here, and we'll be helping you prepare for some upcoming earnings reports for the week ahead. And Ed, anything big on the radar for next week?
Just a little chip off the old block. Nvidia will be coming up, and also we have Costco and Nutanix, both around buy points.
All right, well, let's start with Nutanix, which is scheduled to release fiscal Q3 earnings on Wednesday, May 28th. Earnings for the cloud software company are expected to rise 36% to 38 cents per share. And revenue is seen climbing 19% to $626 million. And here's why we're watching Nutanix. We'll be looking to see if they've gotten any incremental gains from winning business from VMware, which Broadcom recently bought from Dell. So, Ed, in fiscal Q2 earnings, Nutanix saw strong growth in key subscription and recurring revenue metrics. And some of that jump in revenue was coming from maybe some disgruntled customers leaving VMware to join Nutanix after that sale. So, what else are you looking at here with this cloud software company?
Yeah, this is a like data storage and management kind of company. It's been doing really well. I just want to see how some of those ventures are going. It just seems like software seems like a place that rebounded a little faster than the chip names. I mean, because people are still a little worried about that. And this is just can't do solid growth. The growth is going to slow down somewhat. I mean, there was amazing growth for a while there, which has just happened to turn profitable. So it's slowing down, but it's still solid, and just want to see if that continues, if they still see a positive outlook going forward, because this was a winner in a very volatile fashion last year.
All right, Ed, well, let's look at the chart because, as you mentioned, fundamentals wise, growth is slowing, but technically, in consolidation, broke out of that base on May 13th with a 79.99 buy point in very heavy volume here, just hovering below a buy zone here. So, how are you looking at this ahead of earnings?
Yeah, I think that, investors, if it comes out and retakes the buy point on earnings, I think that could be actionable. Wouldn't want to be doing anything ahead of time. And you can see this chart has big moves up and down. So, you don't want to be caught out where you have a gap down of 10, 15%, which would be easy to do. And I also just say it sort of feels like the 76 area was a place where people could have gotten in a little earlier. Not only was there sort of a misshapen double bottom, but it sort of was near the old buy point of like 75.80, or depending how you look at it. Again, very messy about how you look at it. It broke out and it failed soon after, but it's also because the tariff, a lot of the things, the tariff war was kicking in. And so that had an issue, but it's definitely bounced back. Again, it's nice to see that it's already at highs. The relative strength line is acting well. So despite a lot of gyrations in the stock, it is showing, general strength, but it's not one that's going to be a calm player as well.
And Ed, looking at where it's at right now, it does feel a little bit extended from the 50-day line. Is that of any concern to you?
It is a bit of a concern, though. The pause is helping. I mean, one reason why I get concerned about it being that extended is I worry about the risk of a pullback. I mean, it's still there, but it has had a pullback. I mean, so it is pulling back. So that takes a little bit of that off. Again, if earnings are strong, that will decide the case, but that's something to be noticing.
All right, well, let's move on to our next name then, which is Costco, scheduled to report fiscal Q3 earnings on Thursday, May 29th. Earnings for the big box retailer are expected to rise 12% to 424 per share, and revenue is projected to climb 8% to $63.11 billion. And here's why we're watching Costco. We're going to want to see if same-store sales growth continues to cool. And Ed, in March, after the company announced their February quarter earnings, kind of missed some analyst estimates there. It beat on membership fee income, but really struggled in terms of merchandise margin. That shrank by about 10 basis points. So, what are you looking at here in terms of Costco? And we've had a few retailers report. How is consumer sentiment playing into this?
Yeah, I mean, this is a little more upscale than your Walmarts and a lot of other discounters. There's plenty of upscale people who go to Costco, and plenty of people general who go there. The tariff impact, how are they dealing with that? I mean, the tariffs are still very high. And so to what extent do they think they can pass that on? Do they think they can do some other efficiencies? Can they squeeze suppliers? I mean, there's all sorts of things that they might be able to do, others won't. So that just see how those things, but yeah, how they're doing, and the state of the consumer, and this, Walmart talked about price hikes. Costco might be in that, which sort of may be giving the signal that it's okay to raise prices. If Walmart will do that, that might open the floodgates to not only do that, but also to say it. So it's just something to watch. This has been a strong performer for a long time.
And taking a look at the daily chart here, Ed, this one broke out of a cup with handle base on May 13th. That was with a 1018 buy point. And it sold off here heavy early in March after that earnings miss. But what are your thoughts here with the technical action?
Yeah, and some of the sell-off was also related to tariffs. And one of the odd things that normally when you have economic concerns, it's like, well, let's go into defensive names. So it's like, but this wasn't, I mean, these are tariff affected. And so they can, it's not the same defensive play as it normally would be, but it's bounced back. I don't like, I don't like the left-hand side, but it has spent some time cleaning up. It looks a little prettier on the right-hand side. I will say there's not a ton of volume on the right-hand side as it's made its way back. So just in general, yeah, just in general, there wasn't much volume. That's a little bit concerned. I don't think you want to do anything again ahead of earnings. It's right around that buy point. Maybe it sets up an alternate handle with this current week's high by the time, and that might provide an opportunity to get in there. If see if you see a strong move on earnings. If it doesn't do well on earnings, then you can move to the side. So that is an issue. And again, can we see that strong growth going forward? We've seen some weakness. Can we? Same store. Sales growth had picked up. I think the comparisons might weaken and make the comparisons might be tougher. So can you see solid sales growth and solid profit growth in the tariff war?
All right, Ed, and looking at the weekly chart here, we can see Costco has had pretty consistent earnings and sales growth here. We can see it's been a big winner, but over the last year, maybe hasn't done too much. But any other thoughts here on the weekly chart?
Yeah, it does so this sometimes. It goes through these stretches where it doesn't go. Like it's hard. I mean, I'll tell you, somebody getting older, it's harder to do that kind of like do that run. Maybe I can do it, but I feel it afterwards. And I think that's when these older big caps, and this is a pretty rich valuation for a retailer. I mean, nobody thinks like, aha, they're going to discover something and so they're going to unleash something that's going to they're going to keep doing what they're doing. I mean, they might keep better. They're doing e-commerce. There's things that they're doing, and but it's just a little. There's a limitation to those things. You just have to recognize it. It was really impressive run, but it basically doubled over this one period, like from around 500 up to 1,000. That's a lot when the profit growth is more in the low double digits or high single digits. So it could be this needs a longer break, but the action is still acting relatively well. Maybe it's ready to go another run. Maybe it'll need some more time. But
All right. Well, let's move on then. We've saved the best for last, Ed, which is Nvidia. That company is scheduled to report earnings on Wednesday, May 28th. The AI Titan is expected to see Q1 earnings jump 44% to 88 cents per share, and analysts expect revenue to climb 66% to $43.26 billion. And here's why we're watching Nvidia. Investors want visibility beyond the next quarter here, Ed. They probably aren't going to get it. And they're going to want to see assurances that NVIDIA is beyond any kind of production snags for its latest GB200 AI systems and the upcoming GB300 chip. And Ed, CEO Jensen Huang made some comments earlier this week at the Computex trade show in Taiwan, where he talked about these US advanced chip exports and called those largely a failure and said that China's development of AI tech has really increased the competition in that country and has hurt NVIDIA's market share there. But what's on, obviously, a lot going on here with this name. It's a market mover. What are you focused on with NVIDIA ahead of earnings?
yeah, I mean, I think just sort of like that, I think about the GB200, which I think is the Blackwell chip, and to see is that production, because there were some issues with production and flaws and this and that. Is that over? Strictly on that and the export bans. One reason why NVIDIA came up is because the Trump administration said it would not implement a new global tiered AI chip bans. And that also paved the way for a bunch of AI chip sales to Saudi Arabia and other things. Those things would have not been allowed under the Biden administration rules. However, yesterday a Trump AI official said, didn't sounded like they're going to keep the existing AI chip export ban. So those are a lot of different things. But hey, again, the concerns about AI spending, along with Trump tariffs, were the sort of the two reasons why we had a market sell-off. And there's optimism again on that AI spending is still high, and that should be good for Nvidia. Even though the growth is slowing, that's after this massive, it just couldn't sustain that growth. But this is absolutely critical to see how for the market. I mean, just there's still other things, and we're not going to get much visibility because they don't know about chip bans, they don't know about possible semiconductor tariffs that could come in. There's all sorts of things, but it's just something that's going to it is just hugely important for the market, and it's obviously for Nvidia.
All right, Ed. Well, I'm starting here on the weekly chart because we can see it's in a double bottom base with a 143.44 buy point. But I want to point out the action from last week because this jumped over 16%, retook that 40-week line. Maybe a change of character here for Nvidia.
Yeah, I mean the volume wasn't massive, but it was much higher than the prior 2 weeks, and so that was pretty impressive. I think you could have done a downward sloping trend line from the top of this base, and there's sort of a clearing in there. And there was something I think on a daily it was easier. It's sort of like when it crossed the 200-day line, it was more of an obvious thing from the top of 153 down. It could have been an early entry at that point. Now again, there may not be a ton of cushion, and this one can move a lot, but there is a cushion. Yesterday it tried to move out. Again, that's before there was some news on treasury yields and that AI export news. So it reversed lower, but it could have a handle on a weekly chart. It could even have a handle on a daily chart by the time earnings come around. That would create an actual thing. But getting above this level on earnings would probably be a buying opportunity. You can see some of the moves. There's been some big negative things like this. This hasn't really gone anywhere for over a year. Now, so maybe now it's digested a lot of those massive gains. It's still growing at a fast clip. It's really not that expensive a stock anymore. I mean, it used to be like sky high, but it's grown into that. But the last couple of earnings reports have not gone well. And they may sometimes look like they're going to go well, but this is a great example of why you want to wait to see. I remember one in a couple of these things where it rises and then it sells off. That like especially that November one, it broke out to new highs, then it gave up, and then it started selling off, and it just sort of it just so you want to just in general with earnings, you want to wait a few minutes to get or at least get some sense, is that really going to hold? But absolutely crucial for a lot of AI chip makers and the market as overall.
And just jumping back here to the weekly, Ed, because as you said, growth is slowing, but hard comparisons here, just astronomical growth here last year for Nvidia. Anything else jumping out to you in terms of fundamentals that you're going to be keeping an eye on here?
No, I just want to see that guidance again, like really strong double-digit growth that we're looking at, and if they can maintain that, there's still a runway for really strong growth. Maybe not that massive, massive run that's gone, but still a strong run you could see because this is growing much faster than any of the other Magnificent Seven stocks. Really going faster than most. Not many companies are growing this fast. I mean, honestly, there's going to be some, but not many, especially given the recent gains. So it's still a juggernaut.
All right, Ed. Well, those were some of the big names on our radar, but let's continue with the lightning round with some others that have earnings next week, starting with Salesforce, which is scheduled to report on May 28th. This one has sold off here so far this year, but retaking some key levels and looks like it's just shy of that 40-week line. So thoughts here, Ed?
Yeah, getting over the 40-week, 200-day line could be actionable if it does well. But again, it hasn't really gone anywhere for several years now. I mean, so that's something. It just hasn't been a leader. There's other software names that are already up there. So it's there at this point. It's one thing to be below. It's one thing to buy above the 200-day line, but at some point, like that was like a few weeks ago. At some point, you're like, well, wait a second, when is this going to go in? It's a lot of other names have blown by the 200-day line. So that would just be something. Even then, if it does clear, I'm not sure if it's really that high on the list right now.
All right, well, let's take a look at Dell Technology, which posts on May 29th. Still on the weekly here, Ed. Looked like it was trading in a 3 weeks tight area and then had a nice gain last week, up over 19% and holding tight at that 40-week line. So, any thoughts here with Dell?
Yeah, there might be something I don't know if there's a trend line or anything like that. It's this massive double bottom base that's going on here. NVIDIA earnings will also be very important for this, PC server, those AI stuff that they're doing. So I think that could be potentially actionable with that, but it's going to be weird because NVIDIA might trigger a move right before earnings, which adds to the complication.
All right, well, let's take a look at a couple AI adjacent names here, starting with Marvell Technology, which posts on May 29th. And again, this one had a really nasty sell-off here to start the year. Looks like it's trying to come back, but obviously not something we probably want to be buying. But any ideas here with what you may be looking at for earnings?
Yeah, this was one of these custom AI chips, along with Broadcom. And while Broadcom is still doing well and they'll have earnings the following week, Marvell really has not. They had real issues. So, I mean, we'll see. So I think it'd be interesting to see what Marvell has to say about custom AI chips. But yeah, this one, there's no reason really to be looking at this one right now.
Let's take a look at Synopsys, another chip designer name. This one also has earnings next week on May 28th, in a little bit better condition than Marvell, but trying to establish itself back above the 40-week line. Any thoughts here with Synopsys, Ed?
Relative strength line has been weak for a while. They made a big acquisition, I think is closed now, but that may have dragged it down. I'm interested in this. This is like they do designs for chips and other electronics, so it's sort of, it's sort of a chip play, an AI play even a little bit. Its peer Cadence Design already reported CDNS. That one might be more relevant. That might be the one to watch because that's the one's near a buy point. It doesn't have the greatest relative strength line, but you can see it's making a comeback. So that one you could imagine if Synopsys has good news that Cadence might break out, and that could be something that I'm not saying it's the greatest stock, but that one looks better than Synopsys. Let's put it that way.
All right, well, we can keep that one on our watch list. How about Zscaler? They post earnings on May 29th. We're still on the weekly here. Thoughts on this, Ed?
Yeah, it sort of feels like they had a base already within this consolidation that, like that's more in the last 3 months or so that it cleared about 4 weeks ago. So there's a giant base. There's not just, there's that base that sort of got, but then there was a base within that sort of started at the end of last year that it sort of got above resistance levels, or just see it as resistance levels. When it got above, I don't know, like 215 or whatever, that seemed like the time to buy it. Now it feels extended. Could it come back and forge a handle? It could, but that's something that just feels like it's because it is the top of this base from the end of 2023 or so. So there could be a handle. You could buy it off of that. It just feels like it's up and out there and gone, but it's acting very well. It's one of the leaders in the group right now.
All right, well, let's take a look at Okta. They're scheduled to post on May 27th. This one, Ed, trying to come back here from the bottom, but any thoughts here with Okta and what their earnings may say about the market?
Yeah, some messy action, but again, a lot of things have been messy for a whole lot of reasons that aren't necessarily Okta's fault. Relative strength line doing all right. It's at the edge of the buy zone though. So if this does well, it's already sort of could be extended. I don't know if there'll be an opportunity. It's one to watch, but it may not present a great opportunity. But there's some really big volume spikes on some news and other things, just enormous weeks on the positive front lately.
All right, well, let's take a look at another retailer with Burlington. They have earnings on May 29th. This one in consolidation and looks like it's just below that 40-week line. But any thoughts here with Burlington? And again, as we've talked about earlier, we've had retailers reporting. So anything you'd want to see here?
Yeah, I mean, its rivals will have already reported by this time, and some discounters are going to do well. Is this a leader? I mean, it's not terrible. It's like also just hasn't gone really well. I mean, I can imagine if it gets above these levels right here, that could be a hand that looks like it'll be a handle or very close to a proper handle. So yeah, just to see, and again, every time we get another retailer, just want to see, well, how are they handling it? How are they dealing with things? I mean, they don't face the tariffs as much directly because they get a lot of stuff from other retailers, but there's definitely tariff price hikes that are being passed on are very relevant to Burlington.
All right, well, let's wrap with a look at Hesai Group. They're a Chinese company that manufactures LiDAR equipment. I think Volkswagen is one of their big customers there. This one has been on a tear lately, Ed, but what are your thoughts with this? This is when you brought to me that you wanted to talk about thoughts on this chart then.
Yeah, just another way to play a little bit that sort of like that picks and shovels kind of thing, is a way of doing things. A lot of EV makers in China and some like I think Mercedes might be using them too. LiDAR is getting cheap, and so the orders have really picked up. This feels extended. I think if on a daily chart, it might have actually had a handle. You could sort of see sort of vaguely how that 1940 was a handle. It's just that this was V-shaped. It wasn't a proper consolidation, so it broke out this current week. So it feels extended, but it's one to watch. This is profitable. It's a really big profit growth this year, but from basically nothing last year. So, but just another way to go. It just feels like, so even if, one customer, their models become a little less popular, this one can still sell it because now driver assist is becoming sort of standard, becoming free. Not all of that with LiDAR, but LiDAR is be increasingly becoming standard, especially on decently priced vehicles. So there just seems like a lot of orders in there, a lot of competition. I don't know all the competitors out there, but this one is definitely another way to look at the EV and autonomous vehicle space.
And just pointing out, you mentioned that growth, really impressive growth numbers forecasted for 2025 and 2026. But Ed, this is a China stock. Any caveats here with investing or trading any of those names as we all know, it's been kind of a chaotic situation over the last few months.
Yeah, and the chart reflects it. I mean, it's a lot of showing strength, but yes, big swings. You see that kind of thing. You don't know how the tariffs are going to go. It's harder for investors to have a big, good sense in the US, like how is China's economy really doing? How are all those things doing? It does feel like they're growing so fast that they will be able to continue to do well. That doesn't mean the stock is going to hold up because if things disappoint. So yes, a lot of risk. I certainly wouldn't encourage people to put all their money in only China stocks. That would seem to be a little risky. But and So I definitely think that people should be cautious. Think of it, have these things like you can have a little bit of this of China exposure, but probably not too much because of the so many layers of risk out there.
All right, Ed. Well, thank you so much for your insights today. And that wraps it up for this season of Earnings Cheat Sheet. If you want even more market analysis, you can tune into Stock Market Today with Alyssa Coram. That goes live after the closing bell. And thanks so much for watching, and we'll see you next earnings season.